Hi everyone and welcome to today's morning report on Thursday 28th of January with me, Rich Perry, market analyst at Antec Markets. The European trading session is fairly stable actually at the early sort of throes of trading. Not too much going on. The markets have been reacting overnight to this Fed decision. And again, the Fed's fairly much cautious, I think. It's pretty much sitting on its hands, not giving too much away in the statement. Sort of talked about the continuation of gradual rate hike in terms of the speed of hiking interest rates, and it also said it's dependent on the data. But then it's added in this piece about closely monitoring global economic and financial developments. Now that was slightly more cautious than it had been previously, and sort of again, the markets has taken that as pretty much sort of maybe putting aside the potential for a March rate hike. Now, if you look at the bond markets, for example, not a great deal of reaction at all on those markets. Pretty much flat on the 2 year. Slight, if we go the 10 year, yeah, I mean, not really any great deal of movement on the 10 year either. So the market's not really reacting too much. And equity markets, although they fell away in Wall Street into the close, the European session is fairly flat, and the reaction on the forex markets is a slight element of dollar weakness in line with that statement about being closely monitoring the developments. But again, not too much of movement. And today we're fairly sort of settled in the forex markets as well. The oil price is settled as well. Not too much movement in there, and that's sort of obviously helping this sort of fairly benign trading conditions that we see set up in the early European session. So, what have we got to look forward to today? Well, we've got the UK GDP. Where is it? UK GDP at 9:30. It's expected to come in again at 0.5% for the quarter. So, obviously, depending on how that goes, we'll see whether that strengthens sterling or not. Anything above that will be positive for sterling. But they're pretty much the PMIs are expecting, or had been pointing towards 0.5% on the GDP. And then at 1:30 we've got the durable goods for the States. Now that's expected to come in a fairly sort of benign again, plus 0.1% on the month, not too significant a move there. We've also got the weekly jobless claims at 1:30 as well, expected to come in at 2.8, depending on where you get your expectations from, 2.84, maybe 2.82. It's expectation there, so not too much, but maybe you can actually see. Is this a slight increase, gradual increase in the jobless claims? Certainly in the past quarter. Anyway, that's interesting. Maybe I'm looking at that too much. Anyway, so what is my chart of the day? Well, we've got the Aussie dollar, and this is sort of in line with this improvement that we've seen in the oil price, improvement in equity markets. We're also seeing this improvement in risk, and that is helping the Aussie dollar. And this Aussie dollar has formed a bit of a base pattern. Now you can see the base pattern better on the hourly chart, but there is a head and shoulders reversal in there, and it's certainly tested and almost broke through that yesterday. Looking for a close above 70.50, 70.50 being the resistance that we've seen sort of mid and late January. And it sort of broke that on an intraday basis, closed back below the neckline. So I'm still looking for a closing break, but it certainly looks as though we are getting the improvement in this across the board. Now, the Aussie, as I've spoken about often in the past, has these sort of does use the center line, the 50 line on the RSI as a key indicator. You see the sort of rallies coming up to 50 and being sold off. In the bull phases, or certainly the not negative phases, we see the RSI sort of hitting support around the 50. So we're now bang up towards that line now. We've seen the stochastics improving quite strongly as well, but look at also on the intraday chart. Not only are we breaking through that neckline, but we're now testing this 70-90 old floor as well. The old floor from mid-December. So that is a couple of indicators there that I'm looking out for. There's the move above, or holding a move above 50 on the RSI, and a move above 70-90 on that on that move on the price. Now the base pattern that we've got on the Aussie actually implies 72.75. So if we see a close above 70.50 today, that would certainly help. But there is quite a lot of overhead supply, so maybe that the bulls would struggle to make that target of 72.75, which is well back towards the highs of December. But certainly it would suggest that we're going to see gains and pretty decent recovery in the Aussie. So on a near-term basis, you'd certainly be looking out for buying opportunity on the Aussie. Now looking at the intraday chart, again we've seen that fall back into support. We've got the support that is a minor pivot around the sort of 69.90 area, 70 big figure seems to be supportive, and again that sort of held late on the 20s on Tuesday, held again yesterday on the dip, and is sort of pushing higher again. So you'd want to see that continue to hold, but you've got the rising moving averages, the more positive configuration on the momentum, and it certainly seems as though the Aussie is building for further recovery. So I wish you good luck in your trading on the Aussie today, and I'll speak to you later. Thank you.